Hey guys, it's Ian. I want to go over some of the Emini Futures contracts. I've been getting a lot of questions about those on social media and through emails, trying to get a little bit better understanding about how they all work. I'm typically going to stick here with the S&P 500 mini future, which is /MES. And you can see here on my screen /MES. So that is the micro E-mini S&P 500, which is about 1/5 the size of a typical futures contract of which would be just /ES. So when I say that, that means that it'll cost you about $695 of buying power in this, and it'll cost you far more if you did the standard futures contract of just /ES. So what we're going to do is we are going to just stick with the mini futures, which is /MES on the S&P 500, but this is available in the Nasdaq, which it would be /MNQ. You have the Russell, which would be /M2K. You have the Dow, you have oil, you have gold, you have silver, cattle. I mean, all sorts of different things that you can actually trade futures on. And to do that, you would actually want to see everything you could trade on. You would actually want to go to the CME, the Chicago Board of Options website, and they can actually explain everything to you in there as well. But basically, the futures contract is nothing but it's an obligation, just like it is as a standard option. You're obligating a buyer is to purchase an asset, or if you're the seller, it's to sell an asset at a predetermined future date and price. Typically with the S&P, the Dow, the Nasdaq, Russell, etc., you're not going to be taking on physical shares of that. Now, with a lot of the commodities, you are going to be doing that, so you have to be careful. So if you are trading oil, or if you're trading gold or silver, you need to make sure that you're out of that contract before the expiration. Otherwise, you will take on physical gold or physical barrels of oil. I mean, that is actually how those work. So you do need to be very careful about that before you trade any of these. You need to make sure that you understand exactly how each one works. The E-mini futures, they were actually brought up in the late 90s because it was too expensive for a lot of people with smaller accounts to trade futures. And obviously there's a lot of liquidity and a lot of volume in these. And frankly, my guess is that they saw a way to make more money, so they made it easier for smaller accounts to be able to trade it. And like I said, with the S&P 500, the /MES, your value is 1/5 of a standard size. So as a small account, this is definitely something to consider doing. There's really nothing you can do with a full-size futures contract that you can't do with the E-mini. It's like I said, you would use 5 total E-mini contracts to have one full-size futures contract. Uses about $695 in buying power, and you get a $1.25 movement with each tick. So as an example here, we are at 32.2450 is where the MES closed, and say this going up to 32.2475, that would be $1.25 per contract. So obviously, the more contracts you have, the more that would be worth, or frankly, the bigger the risk as well. So I put it up here, and this is how I kind of trade them. So a lot of different ways. Obviously, the market since October has been on nothing but an up move. So you could have been long the mini futures and made a killing. I typically do use this somewhat as a hedge because my option contracts, I am very long in my account currently. So we actually did hedge it right here, and frankly, we did buy again and play this up. Now, I think I played it up to right around here, and then got out. But I did use it as a hedge again and got stopped at 32.05, I believe. So just depends on how you want to play these. These are a great way to hedge your account, like I said. One of the ways that I like to play these is I use a couple different moving averages, like as most of you know. The 15 EMA and the 50 SMA is a big cross that I use. I use that on the hourly and the 30-minute. And that's kind of an entry and exit point for me to get into these trades. So you can see here that you would have been long at 31.9825 on that original cross, and you'd still be holding that today. So, you would have obviously had a real big gain on this. Now, I did use that exit. So that exit was when I got into the hedge and it didn't work. So I did take a small loss on that. And had I stuck to this, I would have actually gotten long, which I didn't. But that's something that it's fairly easy to, use those moving averages and make these trades. And, most of the time it does work. And again, here 31.97, where you would have seen this cross, you would have been flat, you would have actually gone, showed a loss, but because that cross did not come back down, you would have stayed in it, and then you would have caught that move up, that 30-point move up, and still would be long today. So what I'm personally going to do is I'm actually going to wait until this starts coming down a little bit more and wait till I get closer into these two moving averages coming back together. And when those do come back together, I will decide if I want to put that as a short, or if they start bouncing back up, then I would use that as another entry for long. But right now, I feel like I would be chasing that, and I'm not going to chase the market at this level. So just a quick, easy breakdown of the futures and a very simple way of trading them. The 15 EMA, the 50 SMA, and using that on a 30-minute chart and the hourly chart. So typically what you would do is on the 30-minute chart, you would get in as a partial position when that cross happens, or you would short it as a partial position when that cross happens. And then on the hourly, once that gets confirmed, that's when I would fill the position again or short the position again, depending on what you're doing. And once that 30-minute crosses the opposite way, you close out your entire position. I've been very successful doing it this way. I'm not going to tell you that it works 100% of the time because it doesn't, but in the long haul, it does work. So keep an eye on that if that's something you guys want to do. I just wanted to kind of give a quick basic idea of them. And what I'm going to do is I'm actually going to put an article together to get a little bit more detail for anybody who wants it. But again, it's very similar to the S&P 500 when you're trading the ES. It's very similar to the NASDAQ when you're trading the NQ. It's very similar to the Russell when you're trading the M2K. And it's a good opportunity for people with smaller accounts to be able to trade futures accounts. So as always, if you guys do have any questions, please let me know. I'm always here to help you guys out, and I'll see what I can do to keep getting you guys some winners.